market analysis and trade strategy. This is the New York AM session, and today is July 15th, 2025. I'm currently waiting for a potential long position in Bitcoin. I'll walk you through what I'm seeing here. Here on the 15-minute, we have this market structure shift here. Range-wise here on the 15, so this was the range high of the previous session here. Then take that over, we can see in this candle here, we get a market structure shift here. So to me that would signal a potential change in direction. So as price was trading lower, now I would anticipate price would have the opportunity to be delivered higher. I've identified the fair value gaps in this range. Also with this series of candles here being identified as the order block. This being the high of the range here, this being the lower of the range. I currently have a stop loss placed here at the swing low of the fair value gap candle series here. And then I've set my entry here at the high of the order block series of candles here. And then my target, I've chosen a target on the 15-minute, this high here, or this fair value gap here on the 15-minute from yesterday, from a few sessions ago. Target the liquidity up here in this fair value gap. And this comes out to be about a 3-to-1 reward to risk ratio for this trade if I'm able to gain an entry. Trying to improve my trade management of these positions, recognizing that I've seen over the past week a few different things, and I want to dial in my technical trading here. So trying to come into positions at more appropriate locations. Even with this candle here, okay, with this here being the order block, okay, so still looking good here on the 15-minute. So price currently trading around the 117,550 level, and some sell side delivery here. Looks like a new 5-minute low's been put in, and price now trading at 117,520, 117,500, 450, 420, 380. Have an entry here, so sell side delivery with speed, and right into my entry here. And my entry again is in conjunction with this series of order block candles here. These two down candles just before the change in price delivery to the buy side here. So you're seeing this here, and then the change in delivery here of price. Price now consolidating here near my entry. I was able to get an entry at 117,373.6. So a positive slippage here on entry, and starting to get some buy side delivery now. 117,420, 117,400 consolidating here. So interesting seeing this market structure shift here on the on the 5-minute, and then with this market structure shift coming in here, taking out this this swing high on this higher time frame here. So this is the key to this trade right here. Also working on, or at least from what I've seen so far, I tend to get into trouble when I am trading in between certain places. So now I want to keep an eye on my ranges and only trade if something breaks out high of the range, and then look for it to come back into the range. Or in this situation where something pulls back into the range, I want it to pull back to an order block, and then I'll look to take an entry. So I've been going, this is based off of the silver bullet trading methodology right now in the New York AM silver bullet session currently. But recognizing with fair value gaps, there can be some variation. For example, with 3 fair value gaps being in this area, this whole area could just be one large fair value gap on a higher time frame. So trying to gauge where I want to enter on this, or setting a stop, is pretty easy just at the swing here, or at least for me, I like setting at the swing. But knowing where I want to enter based off the fair value gaps is a bit tricky for me. So choosing something that I would expect to see in conjunction with fair value gaps and market structure shifts would be order blocks. So now attempting to use the order blocks as a standard. Like in the past, I would use the equilibrium level. So using equilibrium, saying that if price is being delivered in one direction, I would anticipate it being offered value first in the other direction. So for example, if there is a sale taking place, that premium would be offered, or if there's or if there's buying, that discount would be offered. So looking at the Fibonacci here, anything above equilibrium here would be premium, anything below equilibrium here would be discount. But from what I've seen price action wise, this is not always the case. So for consistency, wanting to choose like a price or level that I can consistently come in at, regardless of the range, or if the price delivering algorithm is offering the other side value. So just sticking to the technicals of the actual price action that I'm trading, I feel like could potentially lend to more consistent trading. So again, looking for reversals when there's a breakout either to the long here, if there's if we're in a buy side trend here, or a long trend or bullish trend, look for a sweep up here, because there's going to be liquidity up here. There's going to be buy side liquidity, so look for a sweep of buy side, and then to trade back in to the range. And then if not, like in this situation where there's not a sweep, so if there's not a sweep, then I would be looking for potential continuation. So with that in mind, setting my entry targets at order blocks. That way, if the trade will work, the order block will hold, and if the trade does not work, then obviously the order block will fail. I'm getting some deep retracement here. This was another thing I was debating with whether or not I just wanted to take the approach of Fibonacci retracement levels. But again, with Fibonacci retracement levels, trying to get price action to reach a certain point with any amount of consistency can be hit or miss, I would say. So the 62% level right here. So using Fibonacci for me would make life much easier, but it's going to take some screen time and some practice here to get this type of thing dialed in. But the way this is trading right now is actually I'm going to fight the urge here. I want to add to the position, but I am not going to. I'm going to do a better job of being a risk manager, and I'm just going to manage my risk here and say I've got on as much size as I plan to have on. But it's when price moves against me, it's like I feel like, oh, let's put some more pressure on it and it'll do what I want it to do. But that only leads to, let's say, 98% of the time me losing more money than I originally intended on losing. I find that if I have an opportunity to add, it's probably better to get out because things are not, the trade isn't moving in my direction, so it's giving me plenty of opportunity to either get out or add more to my loss, and I typically will add more to a loss. But also wanting to get to a point where I'm just sticking to just a particular trading style and just going with what I know works for me consistently. So in this instance, picking an order block for an entry, was also debating the 62% level as well. But with trading with Fibonacci extensions, there's not a consistent level that is consistently breached and then can be traded off of, not from what I've seen, but anywhere from the 50% level to the 79% level, or deeper or more shallow. It just tends to be well, I don't think it's random, but it is not consistent. So the fact that order blocks are not consistent, but they're going to be specific for whatever price action is being traded at that time, it just takes the guesswork or the just, I would say, gives me more confidence in what I'm doing. I have no idea what Fibonacci level will or will not be tested, but if a trade is viable, I would anticipate the order block to be tested, and the order block is not always tested, but I would say more often than not I would anticipate the order block to be tested. So just using the order block for now, and we'll see how that works out. But you can see here on the 15-minute, there was no sweep here of liquidity, so I'm not looking for a reversal back into the range, but price did come back, as you can see here, to the order block here on the 15-minute. So to me, I am more interested in potential continuation here. And for the last, what is this, almost 30 minutes here, just looks like price just wants to sell completely out of the backside here of this buy side delivery. Some very, very, very aggressive pullback here. Price just essentially giving back absolutely all the gains, now trading around the 79% level. Price delivery to the sell side continuing here. $116,720, $116,700, Sell side, sell side, sell side. So short of this price action doing a sharp U-turn, I will be making an exit from this position pretty soon. $16,850, $16,880, $16,900. Starting to get a little bit of that U-turn coming in here. $117,000. And then there's the thought process of, okay, if it doesn't give me an optimal trade entry, then it's not really worth trading. Because if you're trading is one thing, but trading and getting a good value or good price for what you're trading, I feel like is just as important as good trading. So also just considering, do I want to set the Fibonacci? Also with Fibonacci, understanding that in order for a move or a price action to be delivered at a distance, there will be a certain amount of pullback required in order for that distance to be reached. So this order block concept here, I'm not the biggest fan of right now because it did not lend well for my entry at all, in my opinion. It's my target up here, 119,997. I think I'm going to switch to the OTE model here. Let's load up and see if we can get going. I just can't stand getting crappy pricing here, and got a real crappy pricing right here, dealing with this order block. So if I'm able to consistently just hit that OTE, and I'll just go for the 62% level. I can consistently get this 62% level, 62. I'm just going to have to settle down and be content with that. But trying to guess this and guess that and do this and do that, it's a little more than I want to do, or at least I want to keep things simple and not having to make many independent decisions based on what is happening on the charts. So ideally, I want to sit down and make as few choices as possible. Basically, I want the choices to already be made for me, and I am just reading on the charts what choices have been made, and then executing on what I'm seeing on the charts. But being or at least, yeah, so just being at a point where price action is either going to sweep and then give me an entry on a fair value gap back into the range, or price will pull back into the range, and then I'll just set a Fibonacci level there and trade it. I believe that's going to be my plan going forward, because that would simplify me trying to locate the order block, or is it getting to 50%? Is it doing this? Is it getting to the fair value gap? There are lots of things here that come into play where I'm going to work myself in some trades and work myself out of some trades. But the goal here is to, for the trades that I do work myself into, that they are higher probability. And just from what I've seen, the trades that tend to go anywhere tend to pull back aggressively before they go, or will sweep liquidity before making the move. So wanting to do a better job of overall taking advantage of these situations, but it feels like when I get in them, they don't behave as well. But I know that it is not the currency pair. It's my lack of consistency when approaching these currency pairs. Getting some more sell side delivery here, consolidation. But I wanted to go back and look at my trade from yesterday. But yeah, I just want to look at these currency pairs more like rubber bands or slingshots more than anything. But we can see price action consolidating here, definitely showing weakness here. 116,800 sell side delivery, 116,780. 116,550, consolidating here, aggressive sell side delivery. This comes down and sweeps me out, I will be at a loss for words. Not that I mind losing or anything, but the displacement here is just mind-blowing to me. Just complete sell-side delivery, and it's only getting more aggressive the lower it gets. And as I mentioned before, adding to a position typically just means adding to a loss. So super aggressive here, sell-side delivery. So this could actually be a short instead of a long. Wow. So a potential fair value gap could come into play here. see if this sets up a fair value gap here. Okay, this is what happened. It pulled back to equilibrium here finally. So this price action here never pulled back to equilibrium. See this here? And then sold off and never pulled back. Now it finally pulls back to equilibrium. This is where we get this aggressive sell here. It just never stops. So I was looking at that as far as just talking about stuff like that. Like, okay, looking at the effect that offering value has. But that solidifies my idea for that. Okay. So this is unlikely to give me pullback here since I just missed the move on a larger time frame here. So price action finally getting back here for a bigger leg lower. May pull back here to give me something. Maybe. And this could also be pullback right here. 113.6799. $118.4393. It's going to be a 1-to-1, so that's not going to work. And 16.8976. 16.8976.